Good day, everybody. It's Greg Schnell, and we are getting ready to rock here. Let me just grab a couple of things, make sure we're recording. Okay, good day, everybody. Couple of things to start, just housekeeping items. Hopefully, you're all kind of following where we're at. We've had a really nice rally from late March all the way into the recent highs. The last couple of weeks, we've just wandered sideways. So we haven't been able to get a lot of upside impetus going for the last 2 weeks. But one of the big shifts that's happened this week is all of a sudden our strength indicators have started to drop. So I think that's a bit of a problem for us. Let me just make sure. Okay, good. Thanks. Somebody just told me they could hear and see me. I see the screen, so that's good. Anyway, what I want to cover off this week is how things are changing overseas, and show you that the U.S. dollar reversing is a big deal. Dwight's going to present some ideas. The world markets are losing momentum, and that's a real problem here. I don't think it's a COVID-related thing. So anyway, maybe I'm wrong on that. We'll see. But the sectors are starting to change. Oil is at a puzzling crossroads. It's trying to break out, and the real question is, can it continue to do so if the US dollar pushes higher? The backdrop for oil, I think, is extremely bullish, as you all have figured out. But where we're at right now, this was the last slide in the newsletter. And what I want you to notice is this. We ran up to a high, we pulled back, we made this kind of PPO wave, we came up, and then we really didn't have nearly as much energy as we had at the previous high. As we get up here, we're testing, but with a lot less volume than we did on the main high. And so the real question is, do we have the momentum to actually push this market forward? When I just take this chart down a couple of notches, just go grab this one, what you'll see here is this is the year 2000. And if I just run this chart out, actually, I'll just go back one and show you that we kind of made that same big dip down and then went sideways for a while. And then basically we just lost energy. Now, in this particular case, we didn't make it all the way back to the prior highs. But in terms of the relative strength compared to the S&P 500, the volume, the PPO momentum, all of the things are very similar to the 2000 top. And so we still are tracking that, unfortunately, I think is the right answer. And the main point I want to make is just, again, with that same thing, exceedingly high volumes, the same sort of blow off, run up. We'll be writing about this volume blow off for years. This is not subtle. We literally blew the chart here. So if we just add 25 years or 20 years to this indicator, what I want to show here is just that, look at the volume we've seen. This is literally remarkable for us to kind of step up and have that sort of massive volume. Now, the last time we came up a volume ramp was in the year 2000, and you'll see the same thing again where we had almost nothing. On a relative scale, it doesn't look like much, but at the time, this was more than a double to get to these 2000 volumes. And then we started to kind of pinnacle. We pulled back and rallied. This was a big deal. This was a huge pullback, over 40%. And then we had a 30% rally on that. Now, that doesn't get you almost back to the prior highs, because once you've had a 40% pullback, you need more like a 75% rally to get back to the prior highs. Anyway, so we had our pullback, rallied up, and started to fall away. The big thing that I'm watching for here is we've got our PPO has peaked in momentum way back then. We've kind of had a sideways momentum peak, but nonetheless, this was at a very high level. And as we watch this market grind forward, the one thing I'm starting to watch is how our relative strength compared to the S&P 500 comes out of this. If I saw somebody say, the trick is anybody can pop a bubble. The Fed's problem is they've got to pop it gently and get the pressure to come out. And so how do they do that without actually making things implode? And that's a real hurdle for them. So they've been adding, whether you want to call it medicine or cocaine, to the market. We've been running up for 13 months now on that. And the real question is, are we getting to kind of a saturation level where basically the market just needs to breathe, and we'll have to wait that out? So anyway, that's kind of the big picture. And one of the reasons why I think it's important to stay on top of the larger trend for the NASDAQ. Um, what I don't want to do is end up noticing all of these extremes and then just go on ignoring it. So in the newsletter, I posted this chart, and it's been 4 months now into 2021. And what we see here is our current PE multiple, so this is trailing 12-month PE, is 44 times, which is kind of high. And so what the price of the S&P would be if PE was 10, 15, or 20. So here's 10, 15, or 20, and we're way up here at 44, sitting well stretched away from the market. And so we have all of these signs, and yet the market still, we made new highs this week. So Greg, what are you talking about? I think, again, let's not forget where we're at. We have some pretty extreme stuff here. The real question, it never feels like the top till you look in the rearview mirror, but the volume blow off that we had in January, February was literally remarkable. So just to put this into context, the best way to do that is on a monthly chart. So what you can see here is the volume ramped up, but when we drag this out to whatever, 35 or 40 years, it clearly stands up that we had some unbelievable months. And now this month, it was almost a third less than kind of what the last 3 months have been. So we're over the enthusiasm peak, or the peak momentum. And now the real question is, as the market tries to grind higher, can it do that with less interest, with less volume? Will it just level out and continue a nice uphill trajectory because we've got the Fed behind us? Or do we all of a sudden start to top out? So be mindful. Just this is not something to ignore. This rampant volume, the SPAC blowout, the gamification, where on Robinhood, when you enter a trade, it sprinkles confetti on your screen and says, you've now bought Amazon or whatever. We've got so many weird things going on that are literally making, I'll call it, the business of the stock market more odd than ever. We've got the non-fungible tokens. We've got the 1,000 different types of crypto. We've probably got top 50 in crypto. That market is still relatively robust. And if you read on Twitter about the people who talk about crypto, you'd think there's no other answer to the solutions or to the problems of the world. It's going to do everything and be everything, and yet its volatility is 15 and 20% per week. So pretty hard to use it as a currency at that point. I do want to jump over now and quickly cover off the global markets, and there's a specific reason, because they're starting to change tone. And the issue that we've got on these markets is, if the whole world is going to start struggling, I think it's pretty important that we're aware of the changes in the setup. So here's Germany. What you can see, just zooming in, might be easier over here, is you can see that it basically ran up all month and then closed pretty much at the bottom of the candle, almost like an exhaustion. The monthly PPO is right up at the 65 level, which is still on a monthly chart very strong, but typically what we would call a bear market situation. Now, when you're hitting new highs, you're not in a bear market. So we broke out a couple months ago, let's say January or December. We've run up, and now the real question is, can we hold up here? When we go to the weekly chart, and again, Germany's one of the strongest economies in Europe, we are sitting right on the trend line this week. And so that's an important clue for me, just watching what's going on in Europe. When we roll through to France, France broke out to a new high this April. And so the real question is, can it hold it, or is it going to be a false breakout? That's still to be determined. Monthly, that's the look. When we go to weekly, we basically made the move 2 weeks ago. Last week we were down a bit, and this week we tried higher and then closed at the bottom of the bar again. So not closing at the top of the bars anymore as the week progresses, which is a little bit of a concern. One of my favorite charts to watch in Europe, and this came about when I was a really young technician, when I was trying to learn more about the markets. I literally would take a daily chart. I would plot the 11-day and the 22-day moving average, and I would write down what price was doing compared to the 11 and the 22, and was it above or below or in between. And just tried to get a feel for market momentum. And as I did that, the one thing I found was that the Swedish stock exchange typically reacted first, and it was odd, and I couldn't figure out the reason for that. But one of the things is that Sweden kept their own currency but broke away, but has economic ties with Europe. So by keeping their own currency, they're a little bit different, and so their stock market behaves a little bit more nimbly than, let's say, the rest of the European Union. And so I see it usually break out or pull back before the rest of Europe does. So this is the monthly chart, and pretty much a graveyard doji is what we call that, where it runs up, spends the whole month going up. Now this chart is sitting right on the trend line. We closed at 4-week lows here. So we're right at the point where this really needs to bounce right away, but we have broken our uptrend in outperformance that was going on for the first 3 months of the year, and we're starting to pull back. Now, when you look at Sweden generally, you can just see that we basically trade in line with the S&P 500 for the last 3 years. It's pretty much flat. So it's very rare for Sweden to outperform the US, but again, it needs to, if it's going to outperform, it's usually a leadership, and when it starts to roll over, we want to be aware. So we have one of the conditions on the PPO trend line that I particularly like, and that is, like, you have a big running start with your PPO, and then you come down to a touch point, and then you try your last final rally, and you make a very little finish point, kind of like back here. So you had a big run, a very little finish point, and then you kind of break down, and that's a good place to be aware of. Same here, we had a big one. This finish point actually bounced in the middle here and then took off for one final run into the top in 2020, pulled back, and over here we see the same thing. So we've got 3 pretty good examples of this. What I want to watch for now is, does this start to break down through the trend line and the signal line? If that was the case, that would be much more I don't want to use the word alarming, but it would be much more of a signal that something is physically changing in Europe. So as we sit on this trend line, Friday afternoon, close of the markets, everything's wrapped up for April. What do we do in May? So let's keep watching that one. That's a pretty good signal for what's going on in Europe. When we get to the UK, it's a really odd situation in the UK. So the prior highs are back here at 2020, never got anywhere near that on the rally, and they've been trying to rally up. I would just say the UK's been underperforming the US markets for 5 years. When Brexit was kind of announced back in 2016, I think, let's just widen out the chart a bit. I think this area here, I can't remember the dates. Anyway, when Brexit kind of shook the UK, they rallied a bit, but they couldn't kind of gain any real momentum. And now this was the big pullback in 2020. And then what you see here is, as we've tried to rally out of the hole, we managed to make it above this resistance line, and we're still climbing. So that's pretty good. We can start to draw an uptrend line here on the bottom of the PPO, and we'll just see how that works out. So the actual stock market in the UK looks okay. I would say it's the currency that looks like it's ready to break down. Nothing really to cover in Italy. We do have Mario Draghi as prime minister. He came in and now it's kind of rolling over as it's making prior highs. I don't think we can use Italy for much of a proxy of anything, but it's already, if anything, it's a weaker stock market in Europe. It's already broken the upsloping trend line and now looks like it's about to give us a PPO sell signal. Actually, it did to close Friday. We've gone to minus 0.003. So with that, so there's another, or one of the stock markets in the world that's giving us a PPO sell signal. Just need to be aware of that. That's on Europe. When we get into Asia, here's the Shanghai. And one of the things that happened this week was the Shanghai actually pushed up to new 7-week highs, immediately rejected it and fell towards the bottom of the bar. And it closed, I'll say, in the bottom third. While this isn't horrific price action, it's not the kind of price action that we should see if commodities are going to break out. And if you look at this 3,500 level or the 3,450 level and just take it across the chart, we can go back a ways here. And what you see is this 3450 was really in play here back in 2014, 2015. This is when they were opening like 1 million trading accounts a day or something like that. It was a crazy number. Anyway, the stock market changed from allowing Hong Kong to be separate from the Shanghai to putting links between them, and then things literally took off. But during that time, we ended up hitting resistance in around this 35, 36, 37 level. And you can see it was resistance in 2018, got back there. The beginning of 2018 was the tariff talk between US and China. And so here we sit pretty much at that same level. And what I keep referring to in the newsletter is breaking out above the tariff base that we've built there. So it's pretty important for us to kind of make sure that we have, we're aware of what's going on in China. That's one of the single biggest commodity users. We do have an upsloping trend line here that's in jeopardy of getting broken on the PPO. Now, if it's just going to come down to zero bounce and take off again, that's pretty bullish. The bigger issue is if all of a sudden we start to see a negative PPO in China, that's probably sending us a signal for further weakness in Asia generally. Now, here's the Hang Seng, and you can see it's been trying to rally. It made a higher high again this week, but ended up closing right on the bottom of the bar. There's an uptrend line here that we're sitting on, much like we saw the same thing in Sweden, where it's just resting on the uptrend. Now, in this case, it's only a 6-month. The Sweden one was off the March lows. But we're starting to notice, again, a deliberate stall in Asia. And you can see this 30,000 level for Hong Kong was support in here, resistance, a little bit of resistance. Brief tried to break out, failed. And now we're stuck down here trying to get it going. And the real question is, can we muster enough to start turning it back up, or is it going to be something like we see over here in 2018 where all of a sudden it starts to whoosh down? So that's more of the problem we're kind of watching for. The Nikkei still looks pretty strong on a weekly chart, other than the fact it started to correct through this trend line. It's sitting right on the 10-week moving average or the 20-week moving average right now. If it doesn't hold here, the Nikkei gives a pretty good signal about the US market. It's a little bit weaker generally, but what you'd expect is a weaker market would top out before a strong market like the US. So we've had our PPO sell signal in here for a while. We're now starting to get the trend line break. We've already seen Shanghai and Japan and Hong Kong pull back a little bit. So that's getting a little bit worrisome. Now, when we go to the Kospi, and I'll just finish that northern region first, we actually closed on this weekly chart just below the upsloping trend line. Let's call it on the trend line for now. But so far, we're facing a double top that goes back to the January high. We've spent 3 weeks trying to get through it. We closed at the low end of the bar. So starting to see some weakness around the rest of the world, and you see this downslope on the PPO telling us to be a little bit more cautious. Now, I think we've all heard about the crisis in India regarding COVID. We've had this big trend line. It broke, let's say, 6 weeks ago. It's been gently downtrending. And what you see is we started to break out above that downtrend line. But like everything else, it closed the week in the very bottom of the bar. It was still up from the prior week. And I think one of my models is that once investors know the government's full focus is on the problem, they'll start to rally. And I think that was true in the US case when the Fed came running to the rescue in March. The government started to implement a whole bunch of stimulus right around the early signs of COVID coming in. So the economy was still slowing down. And yet the government had their full attention on it. And that's when the economy started, or the stock market started to rally. I don't know if we're going to be that fortunate in India if all the other markets around it are falling. I think the bigger thing to just be aware of here is we're trading below the 20-week moving average for the first time since, I'll call it, the COVID rally started. So since we kind of got above it, we haven't been below it. Now all of a sudden we're starting to track there. So Asia looks weak generally. Looking at Australia now, the next few countries are grouped together because they're all commodity countries. And so if we want to trade the commodity bull market, we should see these charts do pretty well. Australia has been tracking 3 weeks sideways as it tries to break out through the 2020 highs. So that's a friction level we should be aware of. And what we want to make sure of is anytime you're testing a prior high, you have to make sure the market follows through and actually breaks out and runs above. And so what we saw in here in August, September was we pulled back, we ran up against it, we pulled down, and then bounced immediately and took off. So it's a process to try and get through the prior highs. What we have here is we got close, pulled back. Now we tried again. We've been up here 3-4 weeks and haven't been able to really muster a lot when you consider the big bull market that we're talking about for commodities. So we're actually putting a lower high in on the PPO. And if this started to break down from here, that would be more worrying. Here's Russia. We're just going to go to the weekly. You see, we made the highs in 2020. We've come up. We haven't done anything all year, even though oil's traded up to, Brent crude up around $70 and West Texas in the 63 to 65 range. We've had a pretty strong run in oil. Russia's obviously big in oil and other commodities like grains, but they're not really, their stock market's basically been flat on the year. A little bit of a surprise, and you can see our PPO is having trouble trying to get any higher momentum going. We've been drifting lower. We've got a sell signal on the chart. A little bit odd considering the good bullish push we see in all of the commodity countries or the commodities themselves. So here's Canada, and we've run up quite nicely, but up here we've also had a 4-week stall. This week we've got a gravestone doji where we start the week, run up, and then finish the week right back where we started. Not that great, and we've got our PPO sell signal this week. So Canada's another one of those charts starting to kick out some signals. Mexico, they were down 2% on the week, but you can see here we broke out back in January, pulled back, tried to break out again, pulled back, and we've been running up nicely, okay, I'll say, to get through. But this 50,000 level was pretty big back in 2018, and so we were kind of struggling up around there through resistance. Haven't quite got our PPO sell signal here in terms of the red trend line, but we're very close in terms of actually crossing down here. So all of the commodity countries, I would just say, aren't as bullish as I would expect based on copper soaring to the moon and the grains soaring and oil moving and nat gas starting to improve and steel taking off. And how come these commodity countries aren't really ripping? So here's Brazil. And again, we're stalling at prior highs here, haven't been able to make a lot of moves, and we've got a downtrending PPO. So the S&P is going on to its own set of highs and leaving kind of all of these other countries behind, even though the rally's in commodities, which is a bit odd. And then again, Germany made new highs, Sweden made new highs, but they're all starting to, put in 4-week lows. So that's where we start to wonder about the strength of the overall picture. So here's the S&P 500 in a line chart. We've got a really high PPO sitting up here. When we open this up, whatever, 35 years or something, you can see that is a rare air. 2009 on the recovery rally, we got up to that. And in 1997, 1998, we visited it a few times. In 2000, at the actual market top, we never got near that on the S&P. We definitely got there on the NASDAQ. That the NASDAQ put in an absolutely massive hump on the PPO, so indicating high momentum as we went through the 2000 top. My big question here is, this momentum reading is pretty significant, and you can just see that some of the big pullbacks on the PPO chart would probably be expected after being up at this level for pretty much 6 months. So the real question is, how much longer have we got up there if the rest of the world's starting to pull back? We also have a downtrend on the RSI, giving us something to be aware of. For the NASDAQ, again, just short term here, we're up against the February highs. We've been here for 3 or 4 weeks now, haven't been able to make any real headway. We do have a lower high, a low, a lower low, now a lower high so far. And the real question is, unless we can start to spike it up here, this is quite worrying. When you get what we call double divergence, so you have your first divergence, then you have your second one. So price got up to the same high, but we made a lower high in momentum. So you've got double divergence. If this is going to start to break down here, it would be like, well, why didn't you notice that? So one of those kind of technically obvious signs, but as you're pushing to new highs, it feels pretty awkward to be expecting a big pull down. I was absolutely shocked when Apple could come out and beat analysts' estimates by 12 billion. That's almost remarkable. So bigger than the annual revenues of 2/3 of the S&P 500 companies. So that was their beat. So analysts were off by 12 billion. You'd think it'd be hard to miss by 12 billion. But anyway, that gap was so big, and yet Apple still couldn't rally on that news. And I just find, what I would have expected to be stunning, and quite frankly, they're able to be a tax on the mobile app store worldwide. So they've almost been given government power to take 30% of the revenues from all of these small companies worldwide. I think it's a big deal that they're growing at such a huge rate. And obviously, until somebody comes in and says, you can't keep doing that, the kind of the Standard Oil situation or the Bell telephone situation where they just say yes, you came up with a good idea, but you're so dominant, we have to slow it down or break it up and split the businesses into parts. Until that happens, I still think Apple goes higher. They have a $90 billion buyback. That's just huge. So if you have a buyback that big, how hard can the stock fall? I don't think a lot. So one of the reasons I don't expect a big drop in the markets is you've just got such big buybacks that are sitting there from Apple and Google. It makes it hard to believe that we could go meaningfully down with some of the largest companies in the world holding everything up. Amazon was awesome. Facebook's numbers, regardless of Apple's iOS issues, trying to cut into Facebook's ability to track. Facebook's still at all-time highs. It popped on earnings up 8% and stayed up there. Microsoft had good earnings and rolled over. Netflix had a shortfall in subscribers or whatever. But the chart of Netflix, you can see that chart on currencies, on Match, the dating site. You'll see it on the Aussie currency with a February high, then making a kind of a lower right shoulder, which is similar to late December. So with that, you're sitting here watching a lot of charts put in kind of I'll call it a slow right shoulder. And, the question is, can we just consolidate here and then take off to the upside, or is that going to be a hard fail? And we just don't know. And until we do, it's a pretty big question mark. I would just say that this double divergence is a pretty important place to watch. If commodities start to roll over, that's a bigger deal. And I'm going to hand the floor over to Dwight here in just a second. I do want to discuss verbally the US dollar, which was in the newsletter. But it's the context of the US dollar that we really need to understand. So first of all, this big spike in the US dollar here was when the oil fight went on um, in Saudi Arabia. Saudi said, fine, we'll just open the taps. And when they did that, oil plummeted from $110, dropped down to 25 by the beginning of 2016. So oil basically collapsed in this period. US dollar spiked. And we saw a big, I'll call it 3 drives to a high top build. In there, we have a couple of interesting scenarios. And so let's talk about, first of all, the cycle. And then the second of all, the PPO situation. So on our cycle low here, this is a little late for the low, but you can see it was a meaningful top. We kind of round over, just peaking slightly after mid-peak and then coming down. And just as we're supposed to be bottoming out, what happens is we actually try to rally off this little short 3 or 4 month trend, fail, and go down hard. And what happened was commodities rallied pretty good right there. And then all of a sudden, right in early 2018, we had the tariffs, the tariff talk or tariff tennis, whatever you want to call it, kick in. And during that situation, all of a sudden now the US dollar bounced, but it slowed global trade pretty much down. And while global trade was compressed or impaired, the issue we had was what was going to happen to commodities. And we all know it's basically been a bear market since 2011. So what we see here is we have a situation where the currency is trying to make a bottom here, comes down, rallies, and on this second, like it gets up near zero and it starts to take off, and that was a pretty meaningful surge. Here it actually made a bigger dip down, which was this drop, and then it went on its run, so making a higher low. Over here we've got a double bottom, but we're coming up, making a secondary low here, and the real question is, do you roll back over and go down? If so, that would be a long-term trend change for the dollar, because we don't see that on the dollar chart. I think the bigger question is that we have, as we're trying to break out through this situation here, the question is, if the dollar soars back up to new highs, that's going to really swing commodities, and we need to be aware of that in a big, big way. The commodity setup right now, oil is sitting on its $65, I'll call it resistance level. Just let me find that. So we've got oil sitting right here on resistance. So if the US dollar is going to start to break down, I could see this oil chart taking off. If all of a sudden the US dollar spikes, we would break this uptrend in oil, which matches the trend we've seen where the dollar's been changing since the beginning of the year. So what we want to watch for now is all of a sudden, if the dollar's going to take off and this starts to fail, or if the dollar breaks down again and this takes off. Pretty meaningful, I don't want to say knife edge, but a pretty meaningful decision point for one way or the other. If oil's going to break out to new 3 or 4 year highs, it only has to get through $76 to be at new 5-year highs. All of a sudden, that totally changes the game. Each dollar that oil goes up, so if you take something like a Chevron with, I think it's 3 million barrels a day, so that's $3 million a day to the bottom line per dollar. Well, if oil was to go up to $75, that's $30 million a day in increased, pretty much all to the bottom line revenue. There's a little bit of tax going on there, but other than that, it's all to the bottom line. So when you see 30 million a day all of a sudden start to hit on these companies' books, at the end of a month, that's $1 billion. At the end of the year, that's 10, $12 billion. That's a meaningful stride out of these holes. And these companies have been beaten down so much that if oil is going to ramp, these things could really move a long, long way. So we're sitting here at the end of April at this huge decision point with the currencies. I could go through all of them, but I did that on the weekly newsletter or the weekly video. So what I'd suggest is just pay very close attention. If you're in this commodities trade, we need to figure out which way the dollar is going to go. And if the dollar is going to break back down again, then the currency or the commodity trades like copper and steel and oil should literally be fantastic. Conversely, if the dollar all of a sudden starts to run higher as the rest of the world slows, we're going to find pressure on these commodities, and the profits that we've had built up in these commodity trades are all of a sudden going to go away quite quickly. So try and make sure that you're set up for both scenarios. But I called the newsletter this week a storm warning. And the reason I said that is the rest of the world is slowing, as I just showed on the charts. A lot of them are sitting on trend lines, pretty important ones. Crude is sitting on a trend line. Copper's on a trend line. The copper ratio to the copper miners compared to the price of copper broke this week. That's a sell signal for me. Gold broke back down again, so that's probably another concern for those watching commodities. I realize it's been a yield trade, but the bigger thing is there's a lot of stuff changing right now. The US dollar is one of those key inflection points, and if it switches, we could probably expect a change in the equity markets, the commodity markets. So be ready for that. And again, the strength indicators are all starting to break down. Last chart, Dwight, and then it's over to you. Just want to go get this here. Where is it? 1, 2, 3, 4. There we are. Okay. So this is the strength indexes. And the big thing to notice is that these two faster indicators are down already near 50%. They had broken down in early February. They were already very weak by the time the market started to break. So it's an important clue when these start to break down before the slower one or the smoother one. But I think when we get below 50, you want to be very aware of the potential for the market to drop relatively quick. We're sitting on that neckline right now, that 50%. So if it's not going to work, we're in a situation where this would be the time to pay attention. So again, the big backdrop is the NASDAQ with that volume and all that kind of stuff. Are we really setting up for kind of a bigger move down on the NASDAQ? It would feel odd with such great earnings out of the large tech. But if the rest of the world is slowing down and all of a sudden commodities start to reverse, dollar goes higher, all of these things could start to fit together like a giant jigsaw puzzle. And that could be perhaps what we're starting to see out of these indicators. So Dwight, I'll pass the torch over to you. If anybody has questions, please enter them in the chat box so I can get them to you. I can answer them for you before we end. So let me just go. I'm having trouble moving around here. That's the button I need. Participants, Dwight. Make host. Okay, Dwight, can you hear me?
Yep, can you hear me?
Yeah, we can hear you too. So if you can share your screen, we'd be good to go.
Okay, I think I have it shared. Can you see it?
I can, it's coming in, daily setup. Sweet, thanks.
Okay, awesome. Okay, hello everybody. Today I just want to talk about a little bit about where we are in the market. Like Greg mentioned, it's good to know where we are so we can expect when breakouts will hold, when they will fade, what to expect. So historically, I know September, October seems to be a miserable month. I have flashbacks of not having much sleep during those time periods. But when you come towards the end of October, usually until January, February, March, that's when we get all these big momentum runs. And if we think back, we're just coming off of a period where we had like the green names or the clean energy names. Crazy Virgin Galactic's one we could talk about, the marijuana names, GameStop. We get those periods where everyone feels like a genius, where you can just look and buy breakouts. The breakouts will hold, they'll take off, and we'll go through a period of high momentum. And like I just said, where everyone will feel like a genius. So and I know like during that period there's other names like the psychedelics I had fun playing with, like the magic mushroom names, where who knows if they're even going to be real companies, but we're just in that market environment where it seemed like every other day or week we had these new psychedelic names coming out where they just show technical setups, and you know that any type of little move will make them go up 30, 40, 50, 100%. And we're in that period right now where you could get a technical setup and that same news might come out, and the stocks will sell off on it. So, and that's kind of like where Greg was talking about where Apple, and I'll show a chart in a second here, but where Apple came out with these amazing numbers, and one would expect price to break out from, it's kind of building this giant sloppy ascending type triangle, and price was near the apex. And instead of breaking out like names like Google did, um, it was kind of, the price action was kind of muted, where if we had that same type of earnings that came out during that period between October and February, we probably would have got a nice little momentum push out of the apex, and then chances our price would have come back to retest that move. So I'm kind of having trouble finding great setups, and if you've been following the daily setups, you've been probably noticing a lot of these breakouts have been fading back into the pattern. And it's kind of like the commodities where Greg and I have been talking about it. They've been miserable to hold, where you get those volatility moves where price will get a breakout and you'll try to buy the breakout, and then price will have this drawdown for a week or two where it pulls back to the bottom of the range. But if you're sitting there holding it at that time, you don't know if price is going to stop at the bottom of, like, at the lower trend line of the pattern here. So I'll give some examples here. It's like UPS. This was a, oh, sorry. First, I got a default stock chart setting. So for people who use stock charts, it's easier to follow around. What I did was I put it on a 1 year, and then the stock chart will be the 1280 size. So this was one where UPS, I highlighted this a couple times. So this is an example of a setup that worked. I'll annotate it here. So for people want to watch, this was just basic. Price was setting up below this horizontal trend line. This is where I was highlighting it when it was coming off the 50-day moving average here, coming in on the daily setups. Price had a little flagging pattern. Then we get earnings. This is called a power earnings gap, where price breaks out on volume and it continues to trend higher. So that is a setup that worked. Another one that worked would have been Google, where we started highlighting this setup back when price was flagging. Call this like a bull flag or a type of wedge. So price came in, built a bull flag or a type of wedging pattern off the 50-day moving average. This breakout held and it took off. So that was one nice setup that worked on a breakout. But right here, this is where earnings came in. We had a power earnings gap, and you can see right here, price failed. So that's the type of setup too, where you get a flagging pattern, price breaks out on volume, and then the price action doesn't hold. And then, like Greg was talking about here, I was, so the setup I showed on Apple during the daily setups, I shown the weekly pattern. So this is the daily, and that sloppy triangle I was showing you, it shows up better on the weekly time frame. But you can sit here and you can see price was building almost like this huge ascending triangle type pattern. And what trend followers like to look for, or anybody traders, is when price can try to hold this 200-day moving average. So this was one setup that we flagged, and we did highlight it when price was bouncing off of the 200-day, which would have been the 40-week moving average in the daily setups. You got this move back to the upper trend line, and then right here when earnings comes out, it beat every number imaginable one would expect price to break out. And what I like to say is, I learned from a mentor, is expect the expected. One would have expected on those earnings for price to break out like Google did back when we first showed that flagging pattern off the 50-day, or where UPS had that power earnings gap and price trickles higher. So instead of breaking out on earnings, which would have been expected, the unexpected happened, and the price action here is muted, and now it's starting to roll over. So this is, I'll talk about more in the daily setups, but this is a type where you get a huge ascending triangle pattern, and now you want to watch and see if price can hold either the 50-day moving average will be a spot to watch, or you can see here where the 200-day moving average is moving higher and it's trending more or less right now with the lower trend line of that triangle. So this is where you can watch for pullbacks, and I'll keep an eye open as well, and I'll try to highlight any opportunity in the daily setup setups. So this is where a pattern is. You can look for risk reward setups where price comes back to any of these levels. We can watch for the momentum indicators to start to curl higher, and it should offer risk reward entry where you can set a stop loss order, and your downside's limited, where the upside is hopefully price action can continue to trend and eventually break out from this triangle. Where this setup is, it might not be an explosive move, but it might just be a big ascending triangle where price continues to slowly grind higher over time. Okay, so that's that. And right now, another reason I'm finding it hard to show setups is because we're in earnings, and it's always a gamble buying into earnings. So I'll show a few charts again in the daily setups from today, but you want to, what mentors have taught me is going into earnings, if you have cushion in a name where you bought at a much lower price, you can hold through earnings, and it gives you that cushion. If you're wrong and price gap's lower, you can you won't get hurt as bad. But when you're trying to take a new position and gambling on a breakout, it's a roll of a dice. It's like going to a casino and laying it down on 50-50. Obviously the odds might be better if you have insight with earnings that have been accelerating over a period of time. And I don't know, I'll just show here. So one example was NOA was a chart I really wanted to put in the daily setups. And you can see right back here, price was building a wedge type pattern. He had a double bottom off the 50-day moving average. It started showing up on my momentum scanner as this is the MACD. PPO is very similar. The MACD or PPO started curling higher off the zero line. And I really wanted to put this in the daily setups. I went and looked at the earnings date. The earnings date was the next day. And then sure enough, I could have put it in daily setups and I would have looked like a genius on this price move. But the same thing could have happened where I put it in there and they could have had a crappy earnings report and then price gapped lower and broke down the lower trend line. And then I would have look like an idiot. So that's one thing where you got to know where you're playing. And that's an example where if somebody maybe bought this breakout back here on the 50-day, see here, someone maybe bought this breakout back here on the 50-day and they had a bit of a cushion, then it's a lot easier to hold through these earnings dates. Okay, so right here, this is, I tried showing some charts that I've been highlighting over the last few months. So I know CAE is one that I've been posting over and over. So CAE continues to set up near the apex of a continuation triangle with earnings expected on May 19th. So we have this triangle forming, and you can see price has been bumping up against this horizontal resistance line that's more or less holding price from breaking out from a 52-week high breakout. It's in the form of an ascending triangle which is bullish. And we got some time before earnings comes out, so we don't have to, knock on wood, we don't have to expect any surprises. And the one thing with this, if you go back and you look, right now they've had 2 quarters of earnings acceleration. So if that trend can continue, hopefully price can get a breakout. Like I said, it's always a gamble holding over earnings, but this is a name I've been highlighting. So if hopefully some people have been in this back through this pattern, and you can see how price every time it tries to break out, it pulls back into the pattern. So if there's some cushion, it's easier to hold through earnings versus trying to buy at this apex and gambling that earnings will break out. And here's a chart that keeps showing up. It's an American marijuana play. So Columbia Care is setting up below a major horizontal volume by price resistance line as price action pushes higher from a rounded bottom type consolidation / continuation pattern. And one of the reasons I want to share this chart, here, I'll try to expand. So one of the reasons I wanted to show this chart was I wanted to highlight the volume by price bars. Some people might not be familiar with this. So these volume by price bars, they'll show where a majority of the buying or selling has occurred. And you can see right here, I wrote on the chart, the volume by price accumulation distribution area, which creates or often creates support and resistance. And you can see right here, that horizontal resistance line, it matches up with the candles. And you can see within this area was where a large majority of the buying happened. So all these people right now who bought above that resistance line, I like to call them the I just want my money back crowd. And a lot of technical analysis is based on crowd psychology. So when you want to talk about the psychology, all these people above that line are in a losing position right now. And if you've been in a stock and you've been in a losing position, there's lots of times you'll say to yourself, okay, if I just get back to break even, I'll sell. And that's right here. That's what creates this resistance. So right now you can see prices coming out of it's almost like a wedge type pattern. Price is surging higher on volume. We got earnings not until May 17th, but you'll want to watch this horizontal level. It almost becomes a binary event. If the bulls can break through horizontal resistance, it'll chew through this "I just want my money back" crowd, and then it would signal the continuation of an uptrend. But if you want to watch and see if price action fails at horizontal resistance, chances are this might be the beginning of a topping pattern, and you might see price start forming a rounded top. And another thing I liked about this chart was it shows, you can see the PPO. When price action was trending, you can go back to last May, price action trended all the way up to, let's just say where we had the all-time high, or I don't know if it's the all-time high, but we had the high in February. The PPO stayed above the zero line, so that indicates a price action, or that indicates positive momentum. And you can see now, since price broke down below horizontal resistance, the PPO is now below zero, and that indicates negative momentum. So as the CMT teaches, some of the questions on the exam was, or they taught, and then there's questions on the exam that you can trade strictly off of the PPO if you want. And a buy signal comes when price action breaks above zero, and a sell signal comes when the PPO breaks below zero. And it's kind of cool how you can see this horizontal resistance line and the zero line on the PPO are almost identical. So whether price action breaks out above horizontal resistance or breaks out above zero on the PPO, they'd be both be considered a buy signal. And then it gives a risk reward entry where you set a stop loss order somewhere right below that horizontal resistance line. And ideally, if the trend continues, you can just trail with the stop of your choice. And it's kind of nice here. You can see this volumes coming in while price is pushing up underneath horizontal resistance. So this is an example of breakouts that keep being faded. This is a chart I posted over and over again in the daily setups. So Century Communities is breaking out on a surge in volume following a great earnings report. Below are charts I highlighted on March 10th, April 1st, April 6th to demonstrate the construction of a price pattern over time. And as I wrote earlier, further discussion will happen in the conference call as it is now. So right here, you can almost call this, it's almost like a rising wedge or almost like a rising flag where price action kept bouncing up against that upper trend line. And then finally on a positive for earnings, we get a breakout on volume. So you can see right now, if you go and look at the earnings, the past earnings on this company, we've had quarters of acceleration. We've had four straight quarters of earnings acceleration. The company's doing great, but we'll come down here. So the first chart I highlighted was March 10th. And you can see it was kind of like a bullish pennant. Price started breaking above horizontal resistance as the PPO curled higher. And then on the RS line, which is relative strength versus the S&P 500, because we want to be in names that are outperforming the S&P 500, it started to push to a new 52-week high. And then when we zoom down, so this was a chart on April 1st, that breakout that we showed here, you can see it ran up to horizontal resistance and price pulled back into this bottom trend line. And that pennant formation, it started to form a bigger ascending triangle type pattern where each time price looked like it was going to break out, it would suck in the breakout buyers like myself, and then price would pull back and try to shake out the weak and then start forming a bigger price pattern. And then again, price showed up on my momentum scanner on April 6th. And you can see price, after bouncing off the lower trend line for a second time, price made another new 52-week high. And then again, the PPO started curling higher off the zero line on bullish volume. But even when we scroll back up to the chart where it broke out from, that next breakout, again, it touched the upper trend line and then pulled back, tried shaking people out, hit the lower trend line of the pattern, and then finally it broke out. So that's a period we're in right now. And I know Greg talked about some of these commodity plays where FCX was exactly the same, where each breakout where FCX looked like it was going to move, which is the copper play, price would break out, pull back to the lower trend line, look like it was going to break out, pull back to the lower trend line. And then most recently, price broke out, and then again, it came back to retest the breakout. And now we'll have to see where we're at. And that was one, where, let me see here. So that was one chart I wanted to look at where Greg said we're near an inflection point. So this is that FCX pattern. And you can see where first we could have had a bull flag, price pulled back. Then we could have had a bigger triangle here, price pulled back and retest the breakout. So now we had another breakout that touched the 52-week high. And again, price is rolling over. But one thing I noticed here on the RSI, you can see there's some negative divergence versus price action on the chart. And back here, let me say in October, where you get this breakout and then you just go on these momentum runs where you almost just put things on cruise control and everyone feels like a genius. Now we're in this area of volatility and we got to watch and see. So then even down here on the MACD, you can kind of see where is this MACD, is it running into the underside of resistance? And is it going to roll over, or is it going to be price maybe bounces off the 50-day moving average just and the trend continues? But the one thing to be aware of is this negative divergence. And if price does start to roll over, the one thing you can watch for often is you might start forming something that looks like a rounded top, or lots of times you could call it a head and shoulders pattern, but we don't know what's going to happen, so we got to watch and react. But like Greg was talking about earlier, that's one thing to be aware of. Scroll down here, let me see. Okay, so here's a company in Canada. This is a best of breed name. It seems to be like all the fund managers in Canada love it. I like to call them the market darlings. So Convergent Technologies right now is set up on increased volume at the apex of a giant consolidation / continuation pattern. And this was a setup I highlighted on Thursday. So we got lucky here where price action was curling higher off this lower trend line. It came in on a surge in volume. And then on Friday, we got some nice follow through. So for a day trade, that was a nice setup. On Friday, it was up over 9%, but now price is running into the underside of horizontal resistance. You can see over here the volume by price bar, which I described how that works above. So we have a major accumulation within this pattern that has been forming more or less since January. So January, February, March into April. It looks like 4-month consolidation pattern. And they don't report until the 26th. So this is a setup where ideally you might get one of those surges. So a measured move technically, we'd be back to the high of the pattern, which would be 680. But ideally, what I like to look for is a continuation of the trend. And if we get a breakout here, hopefully price action can just keep trending. And this is a continuation pattern where you can trail with a stop loss order. And this is another setup. So I first showed this setup in the daily setups. It would have been back here at the beginning of March when price action started to break out from this pattern. It made a high of 2102. It pulled back and is kind of like a parabola here where prices just keep slowly going higher. So this company has 3 quarters of earnings acceleration, and they just reported on March 28th. So you can see this breakout's happening on volume. And this is a specialty chemicals play, but they're benefiting from the clean energy sector. And I'm pretty sure they're used in batteries and stuff. So it fits the ongoing theme. And this is the thing. So price actions is making a 52-week high on increase in volume. So this is one where we want to watch it. Just because it's breaking out, it doesn't mean it's going to keep going higher. But right now it's suggesting a continuation of the uptrend. And one thing is to expect the expected. If you look back over the price action of this chart, it historically has moved pretty. There's lots of volatility, or the stock trends in a choppy way. So expect the expected would be if the continuation happens, there will be volatility, and one would just have to figure out what type of trailing stop loss order they'd like to use to keep them in that place so they don't get shooken out, but they're also defining downside risk. Freehold royalties. So this is a royalty play, benefits from the energy sector, which we like, or we have liked, and we want to like going forward. But again, we got to watch and react. So this is one that's setting up near 52-week highs where the PPO momentum indicators trying to curl higher off the zero line. And they don't have earnings until May 12th. So this is one to watch for. And we have a few days before earnings comes out. Intertape Polymer Group. So this is kind of an industrial name that it moves when the economy is strong. And this is a setup we've highlighted before when price first started breaking out in March here, started coming out of this rounded bottom type pattern. And then right here, it had a nice gap higher, went into consolidate into this, call it triangle or a type of flagging pattern. So earnings on this again is May 12th. It's setting up for a 52-week high while the PPO momentum indicator is trying to it is performing a bullish cross. So this is one where we have time before earnings, and it looks like price wants to trend higher out of that continuation pattern. The way to play this is suggested stop loss order. We just go below the lower trend line in the pattern. I like to use the price labels. So on this would be 28.29. And so this is one chart I wanted to highlight. So I don't know if you've been noticing, but I've been sprinkling these regional bank names throughout the daily setups, and all the patterns are the same. But these regional banks and these bank corps, they keep showing up on my momentum scans over and over and over again. So each day I could post probably 2 or 3 of these banks, these regional bank names that are setting up technically perfect. And a way to play this is the KRE ETF, so the regional bank ETF. So this is one to watch. right now you can see where momentum, there's a little bit of a fade on Friday after price started pushing higher, but you can go back through the daily setups and look at some of the banks I've highlighted, and I'm sure I'll continue to highlight more as they show up on the scanner. And one example would be Origins Bancorp here. So it's set up to continue trending higher following a nice earnings report as the PPO momentum indicator curls higher off the zero line. So they just reported on the 28th. They had a great earnings report. You can see volumes coming in as price tries to break out to a 52-week high out of this pattern. And right now their earnings, their quarters of it, earnings acceleration is 4 in a row, and they're making money. And again, that KR ETF shows up. And if you keep seeing me posting these Bancorp charts, it's just because they have gorgeous patterns and they keep showing up on my scanner. And then the last chart for today was, this is one I was posting earlier, where price action, I think I started posting it when it first broke out of this pattern. You can see where expect it. Yeah, this choppy volatility. They don't report until June 9th again. The PPO is trying to curl higher and price is trying to break out of this continuation pattern. So this is a name to keep on watch. Yeah, there you go, Greg. Is there
Super. Thanks, Dwight.
any questions here before I
Yeah.
hand it over?
Let's just, I don't see any in the chat. Let me grab my video, and if you can pass control back to me, that would be good.
Yeah. Okay, there you go. Just let me do the host.
Okay, I am the host now. Super. And everybody's still viewing Dwight's screen, so let me fix that. Share screen. There we go. Okay. So there was one comment about could I post these more often or post all of these on the daily setup? So what Dwight had shown there was the daily setups page, and on Tuesday, Thursday, and then on the weekend, I will post the strength index. And the reason I don't try to post it, or I haven't tried to post it every day, was because it was getting to the point, not the SSIH so much, but the other two whip around a little bit more. So they do need some context on how they work. In this case, what we can see is a really nice climb. And you can tell I've started to post more often to define this peaking period in here. But this looks very similar to me to back in here in December of 2020, where we had a few pullbacks, the market tries to rally, and then we basically just run out of steam and we get up here to this level. And my point of these yellow lines is after it crosses back below 75, we want to be cautious. So we've just had that here at 76.50. And so now, again, of the group of charts, which is over 150 charts, of the group of charts, what I try to keep track of is the weekly momentum data for all of that information. And what we want to know is when the whole group is starting to turn down, right? And so we were at 76% of them were trending higher, and now all of a sudden only 2/3 are still trending higher and 1/3 is not. But on the shorter time frames, on the SSIF and the SSIQ, those two are measured differently. But they're both down around the 50% level. So they're more reactive, and they're already telling me that they're down at the 50%. So it's cautionary. And again, we still had good moves in, I'll call it the commodities space as an example. But all of the setups, every single setup that I put out last week from the EV chart list, all of them looked like they were going to try and break out. And then guess what? None of them did. So when you get that sort of price action, and what we were looking for here, let me just zoom in. I'll grab a little shorter chart here. So what we were hoping was that this trend line across these peaks would start to break out. And what happened was literally on Monday we pushed up, and then Tuesday, Wednesday, Thursday, Friday just fell. And of course, this is ARC's Innovation Fund, but we could take all of the other ARC ones. They're doing the same thing. But what's most notable is to watch where this PPO is rolling over, right at zero. That's a really big problem. So what that says is, first of all, we went negative on our attempt to rally. We fail. That's when things really move down fast. So we want to be cautious that if we're starting to see all of these innovation names start to move down fast or really lose significant momentum, that would be a problem for us. So here's Fisker cars. And what happened was we had this big downtrend that had gone on for 6 weeks or whatever, started to show a little bit of revival. And what I was saying was, we're at 2-week highs. This is hardly significant, but yet, this was a $32 stock. Anything coming back, we were, I'll call it less than half price. Any sort of rally out of this base here would be worth owning. Well, guess what? On Monday, it pushed up a little bit and then just drifted away for the rest of the week. So when we go to the big gun in the space, it tried to rally. And again, this has been on the list for a couple of weeks already, but it just hasn't been able to follow through. And so Friday, it gave us some hope with a nice big candle higher. Perhaps this is going to bounce off zero and start to take off. That would be great. That would be the opposite view, and I'd be much happier with that. So if we just roll this out to a few more months. So we've got a PPO coming down, and if it can bounce off zero and start to take off, that would be great. The real question is, what if it doesn't and it rolls right back down here? That's a very bearish signal. And again, we probably just broke through the uptrend on Tesla. So all that to say, there's a whole bunch of reasons to start worrying about the strength of the bigger picture. And again, it's been 13 months up, so let's not get too depressed about that. But more what I would rather do is just make sure that everybody's aware how tentative showing weakness in the big indexes is starting to hit on a few different fronts. And that shocking Amazon report, the Apple report, those were crazy good, and it wasn't like they'd rallied into them. They're still just kind of running sideways. So I still want to watch, but when I look at Snowflake and I look at Shopify and I look at all of these companies, like they're still trading in multiples of their revenue of 40, 50 times. So this is a big inflated market, and that volume profile on the NASDAQ is a pretty important one for us to watch. Again, if we're going to get rid of I'll call it all the newcomers who are just buying a stock, assuming they all go higher, and we're back down to institutional investors starting to push the stocks around, they're not the ones who are going to buy these things at 40 and 50 times revenue. So we'd probably need to see the names come in significantly before they start to break out. All that to say, it's a choppy market. The breakouts aren't holding, so try and make sure that you're managing your positions either smaller, so that if they start to move, you still get some lift, and if they don't, you're out quickly with smaller losses. But it's when the strength index stays below 75, you're typically in more of a trading environment. When it's trending higher, like it was in most of 2020, and like it was just even recently here from March, as it's starting to accelerate, that 1 month is a good place to get on board. As it starts to roll over, then we start to lose the enthusiasm for the gains. So hopefully we've been helping you make some money in the market. I know I've had a reasonably good year, and hopefully you have too. If you've got any further questions, please email me, info@gregschnell.com. I'm traveling a bit on Monday. I'm on Aaron Swenlin's show on Decision Point on Monday that you can catch live if you'd like. It's two of us chatting about the market. It starts at 9 Pacific, 10 Mountain, and 12 Eastern, so noon Eastern. And if you'd like to catch that link is in the article that I wrote for Chart Watchers. So you're welcome to find that on the newsletter I sent out today on the newsletter page. It's at the bottom of the article. So click on that link and you'll be able to join us in Aaron's newsroom. And that goes for roughly an hour. So if that would be nice to hear, feel free to join us. Thanks for taking the time. Oh, there's one more quick chat. Let me just see what's got. Somebody said, do you have a favorite lumber producer, or is the lumber trade too toppy? One of the concerns One of the reasons a stock market will actually top out is because the cost of goods goes up so much that the companies can't pass on the price. And as that starts to happen, I think on lumber now we're talking about the lumber prices being over $30,000 per house, or have increased by $30,000 a house. That's a meaningful change. And we're seeing it in copper, we're seeing it in, hardwood flooring, we're seeing it in a whole bunch of different areas of the market. So uh, when you get there, I think what you really want to know, what we want to focus on is making sure that we're not sitting there holding the bag. Now, if I go look at this lumber chart, it's not just taking off, it's unbelievable. And I'll give you an idea. So 5/8 plywood was $31 a sheet. I just redid my deck at the cabin. It was $67 a sheet. And so all of a sudden, a surface that would have cost me, let's say, $600-700 was over 1,800, and that was just the plywood. Now I also bought new floor joists and stuff like that. So the chart is going ballistic, but interestingly enough, is when you look at the wood ETF, which is in the video this week. So just if you're interested in that, let me just go add a panel here below. I'm going to just put price on here. And there's cut wood. You can take a whole bunch of them. But what the wood ETF is doing is rolling over. It's turning down. Well, you can see it, I guess, over here, while lumber is still going ballistic. So the lumber producers aren't following higher. And it's like the copper miners aren't following copper higher. The oil XOP, oil still holding up, but XOP is making lower highs. All of these are starting to be cautionary signs for me that the commodity trade either isn't believable or is running into exhaustion. And so, and the second component of that is when I showed Russia and China and Brazil not really doing that well. Australia can't break out, even though we've got copper charts like this, and we've got a corn chart absolutely going crazy. And corn, soybean, wheat, those charts are running nicely. So anyway, the difference is the companies aren't following anymore, and that's a good clue for us to start taking profits in those trades, or at least capturing some profit for now, to make sure that if they do turn higher, get back on the train. But if they're all making these higher highs, or lower highs, that's a problem for us. Okay, good. A few more questions have come in. Okay, thank you. So somebody asked about the uranium play. I have tried to play Cameco so many times. I don't know how many small losses I'm going to take on that trade before I just quit putting this trade on. So it runs up, breaks out. This is exactly what Dwight was talking about. Has a nice day, you start to get on it, it's buying, pulls back. Has a nice 2 days, pulls back. Has a nice day, pulls back. Like, the thing is just so choppy. And the worst part is, up 3 days, down 10. You run into exhaustion where you don't want to own the darn thing anymore. PPO is right at zero. This is a nice place to enter. That's typically what I would like. PPO just pulling back to the zero level, starts to turn higher. I want to get on board. The problem I'm starting to see, when I go to uranium, the actual uranium ETF, is it's running out of upside momentum as well. If this big trend in the PPO, let's just draw it a little better, more like that, and make it black. If this trend starts to break, I'd get a little bit more excited. Maybe it's finally saying I'm breaking out of my sideways range and I'm ready to turn higher. On my Twitter feed, somebody yelling, uranium's doing fantastic. And I'm thinking it hasn't gone anywhere in 3 months. So our definition of fantastic is different. I want something moving, and if it's not going to move, I want to stay away. So again, I'm a big bull on commodities, but if the US dollar is going to change all that, then I really want to make sure, I always keep doing this backwards. I really want to step aside and let somebody else take the pullback, and then I'd like to get in closer to the bottom. We have had a heady run. It's been awesome. But the CRB is right up against a 10-year downtrend line. We got the US dollar at, I'll call it a meaningful decision point. And so we need to make sure that that dollar either starts to break down so commodities can break out, or if the US dollar goes higher, we have already captured our gains, or we've put ourselves in a position so our stops get hit and we get kicked out. Dwight mentioned FCX. That's the single best miner. When I go look at these other ones, BHP. So this one was trying to take a prior high, rolled over. Like copper's gone to the moon. Why isn't this thing following on? Rio Tinto is a steel. Basically ran up against the highs 2 weeks ago, hasn't done anything, spent Friday going lower on that US dollar. Look at our PPO. So one thing I need to describe on the PPO, sorry, I'm running over on time, but the PPO got below zero here. And one of the things I like to think about is after momentum goes negative on your next rally, you have to be really careful. If it can't make higher highs, you want to take profits because that's potentially your final high. So momentum got so weak, it got negative, and then on the next rally, it's kind of your last hurrah. So just on a daily chart, that's a reasonable thing to watch for. If I go look at Vale, which is a big steel company, they had broken out to new all-time highs. I mean, that chart looks great. So at least I'm happy there. Teck Resources is a big commodity company in Canada, and they got all of the good stuff. They got the stuff for the electric vehicles, but they also have coal, metallurgical coal that they ship to China for smelting for steel, and well, not just to China, but to steel smelters. That is the BTU output of that specific type of coal is very good for the manufacturing process, the smelting of steel, aluminum, all that kind of stuff. Notice this chart hasn't gone anywhere in 3 months, even though the steel chart's through the roof and the copper and these charts are all running. So the question is, what does it take to get these going? Now here's Caterpillar. As copper's going to the moon, as the metals are going to the moon, why isn't Caterpillar continuing to follow the trend? So I'm trying to figure it out. I can't figure it out. I haven't got any answers. The only thing I know is all of a sudden I started to get stopped out of the trades I was putting on, and that just said, you know what, let's just take some money off the table here. And then on Friday, the dollar reversed. So I want to thank everybody for joining. Hopefully you're making some money in your portfolio. Again, I want to be very optimistic when the opportunity presents itself, and then I really like to just turtle when the market backdrop is not as favorable. I'd rather do something that is less stressful than continuing to get kicked out of trades. So I don't have to be in the market all the time. Now, other people do have to be in the market. And so one of the ways to do that is to move into more defensive sectors like staples or utilities or pipelines or whatever, to get some revenue, some distribution, dividends while you're waiting. You might still put up with some drop in capital, but at least you've got your dividends if that's what you need. For other people, it might be just moving money into cash. Other people could use puts, could take smaller position sizes, could spread out the spectrum. Dwight's still putting up some good charts, but again, like he showed, they're kind of breaking out and pulling back, breaking out and pulling back. First Solar looked like it was going to break out and pull back. It's really choppy out there, and the semiconductors are definitely underperforming, so that's just odd. Anyway, with that, it's a cautious start to April, and we'll see where we go from here. Thanks, everybody, for taking the time to join us. Have a great month of April. We'll talk to you at the end, or a month of May. Yes.
Greg, can you hear? Before you go real quick, I had a direct message from Bob. Sorry about that, Bob. I missed it. He wanted me to look at Starbucks.
Okay.
So technically I have no edge, but what it looks like it's doing is it's retesting the recent breakout. And ideally we just want to see that stock continue to trend higher. And personally, I like to use on the weekly chart, or you can use the daily, is the 100-day moving average on the daily or the 20-week moving average.
This black line is the 100, yeah.
Yeah, so the black line works on the daily, and also I like looking at the weekly chart. So the middle Bollinger Band is the 20 period or the 20-week moving average, where on the daily it's approximately the 100. And when I see these trends that are moving higher, I like to see a trend above that level, and that's what I'd like to use as a trailing stop loss. And then I have mentors who they like to put up with more volatility, and again they use the 40-week moving average or the 200-day, which is a lot lower than where price is now. I don't like to risk that much, but right now, on that chart Greg's showing, you can see price right now more or less just came back to retest the recent breakout. And ideally, we'd like to see that successfully hold and price will continue to trend higher over time. And you can see on Greg's moving average right there, that works perfectly. What period is that, Greg? Is that
That's
the
20 period. Yeah.
okay? So that's the 20 period, and look how it works. So
Yeah.
when I say expect the expected, I just want to see price to continue to grind higher over time above that moving average. And if price fails to hold that moving average, that'd be the unexpected to me. And I just like to I'd personally take profits or cut losses and then watch for it to regain that moving average before I re-enter.
The
So
one thing we have to worry about here is a little bit of lower momentum. I still like the stock. I mean, who's not going to go to a Starbucks as the economy opens? I think it's got a huge upside.
mhm.
But the scooter ranking is now dropping below 50, which it hasn't been for the last 6 months. When you look over here, when the scooter ranking starts to get weak and Starbucks starts to underperform, then it typically, not dramatically, it can underperform the S&P 500. Do I think it's going down hard? No. There's people going to buy coffee every day, and I'm a big one. So I like the chart. I would just say the scooter ranking's telling you to be a little bit cautious, but that's about it. So, okay. With that, thanks everybody. We better wrap it up. Have a great month of May, and we'll talk to you at the end. If you got any questions, info@gregschnell.com. Hopefully, and I do check the emails once every 2 or 3 days, not every day because I don't get that many emails in there. But if you have anything for me, I'd be happy to try and answer.